Welcome to Get Rich Slow with John Wolf. Today I want to go over what happens, what are the steps for getting a loan and owning your home. Make the licensed people happy. All right, so the first step is going to be getting your pre-approval. Some people call this a pre-underwrite, which is both of these things are totally different from doing a TBD full underwrite. Pre-approval, typically, I'll have that done in less than an hour. Full underwrite will require all of the documents, and turn times are often near a month for that. Anyways, what I'm going to look at are just the income, assets, credit, any bills that you're paying, and then I'm going to take a look at the average home price you're looking at and get an automated approval. I call it kind of a dumb yes or no. Next thing you're going to do after getting the pre-approval, if you don't already have a real estate agent, we'll find you a great real estate agent and just start looking at houses, get into a purchase contract, get an offer accepted to buy a home. From there, I'm going to probably reach out to you. We'll get maybe some more documents, maybe clarify some questions, and we'll submit the full application to underwriting. Now, while we're waiting for that, because underwriting at least takes a few days to get back to us, you're going to be working with your real estate agent on repairs or pricing addendums, and we'll order the appraisal, maybe even get the appraisal back before we hear from underwriting. Then underwriting will return a decision to us. Now, that's usually going to be a conditional approval. Sometimes it's a decline. Either case, it's going to explain the reason and then just sort of list out what documents would be necessary to make this conditional approval an approval, and done. And at that point, one of my assistants, my loan processor, is going to reach out to the client along with me. We're going to go over what documents we need, get those all together. That's also going to include documents about insurance, documents from title and escrow, not just from the client. Sometimes documents from the real estate agents or even myself or my loan processor. And we'll put that all together, ship it back to underwriting. Typically just in a day or two, we hear back from underwriting after they've done the review, sometimes same day. And if everything is there, we're going to get what's called a clear to close. And a clear to close is the first time that we actually have a real approval. Sometimes if we're still waiting on the appraisal, it'll be a clear to close just minus you got to get the appraisal and it has to meet standards. After we have the clear to close, or around the same time, we're going to send out what's called the certificate for disclosure. Now that's really similar to something you would have gotten before called the loan estimate, but this is just like the official version near the end. It's official even though it can change from there. But that's sent out and that starts a 3-day timer after the client has looked at it. So you actually have to open that document to start that timer. While that's occurring, a really funny step called balancing, and it's a step that I'm really glad that the client isn't copied on. Basically, you have 3 parties, 2 parties at the lending company and 2 parties over at the title, and they have to exactly agree on the exact final numbers of the transaction. And that's really complicated when you have to calculate per day interest, you have to calculate the per diem on the taxes. So if you've ever seen like 4 different people try to do a really long multi-step math calculation and just come up with slightly different numbers at the end, there's a nice merry-go-round that goes until everybody gets on the exact same page with the numbers. After that, the documents are drawn. So the lending company draws all the documents, sends them to title and escrow. At that point, the client could come in and sign those documents. After those are signed, they're shipped back to the lending company and just looked over really quickly, and then funding occurs. So the funder works at the lending company. They go through a checklist to make sure everything is perfect, and then they wire the money to title escrow. At that point, title escrow can record the transaction with the county, and that's the moment that the deal, becomes finalized and you potentially own a new home. So if you have any questions, please put them in the comments. Like, share, subscribe. And I make my living being a loan officer in Oregon and Washington. So if you need any help there, I would love to hear from you. Have an awesome day. Bye.